Good morning, everybody. Let me remind everybody what I do every morning and a little about my background. Remember, I spent 20 years ago a number of years working for a few different hedge funds, big banks, and institutions, which gives me insight into the way they trade. Now, understand their tools have improved, but so have ours. We can now track order flow, we can now track unusual options activity. That is what I'm here to do, break down the market, give you a potential possibility of what happened today, why it may happen, and what other influences are on the market right now. Now we're talking about the Fed this morning. I know debt ceiling got passed last night, but it's all about the Fed this morning and whether they're going to raise rates come 2 weeks from now in June, or whether they're going to pause like they actually are telling us. They're telling us we're going to pause and we're potentially leaving July open for a rate hike. Well, the market likes that. The market's saying, pause, okay, rates aren't going up, stocks can push higher. So that's kind of what we're seeing right now. I am suggesting to everybody, please use a little caution because the NASDAQ is at an all-time high right now, and the debt ceiling just got pushed, which means the Treasury will have to issue, I don't know, $1 trillion worth of T-bills in the next few weeks to put money back into the government's pocket so that it can pay its bills. So where's that $1 trillion going to come from? It's got to be pulled from the market. Let's remember quantitative easing, right? The Fed has to lighten up on their balance sheets. So again, great news. Debt ceiling passed. It would have been terrible for the markets if the debt ceiling wasn't passed last night. With that said, again, liquidity's got to be pulled from the markets. I'm just looking at what's happening pre-market because we just had jobs numbers drop at 8:30, and I just want to gauge the market's initial reaction to the jobs numbers. Slight drop, so we'll see how that plays out. I will talk about a few different stocks, but again, my background, I worked for the hedge funds, worked for D.E. Shaw, worked for big banks, J.P. Morgan, worked for some smaller institutions, Greenwich Capital, some holding companies. I know how they trade. I'm trying to share that information with you to make you a more efficient or effective trader. Funniest thing right here, Avgo, A-V-G-O, Broadcom, right? One of the latest plays on AI, NVIDIA, chip sector, AMD. Broadcom was up at $921 2 days ago. Well, you had Susquehanna, one of the analysts, came out this morning. They put a price target of $910. Well, shit. That stock 2 days ago was $921. It fell to 803 where it closed at yesterday, or 2 days, 2 days ago, the same day it was up 921. So they're basically telling you, hey, price target increase of $100. That's where it was 2 days ago. So they're telling you, hey, man, we can short it 921, but we could buy it 800. I mean, it doesn't make sense. Again, I'm not trusting the cues. I mentioned this yesterday morning, and yesterday morning I told you all I thought we'd be green on Thursday and red on Friday when the bill passes. Yes, we are pretty green this morning, but again, I'm going to stick with my intuition. I said green Thursday, red Friday. Any positions that I'm in that are get hurt this morning on market open, I'm not trading them till at least 10:30. I'm going to let the market settle out. Because remember, institutions, market makers are here to fool you. They're here to make your money. I use the word steal from you, but that's what they're doing. They're trying to trick you. Let's remember last year when we had Jamie Dimon coming on saying the market could drop 20%. And what do? We rallied, right? We're in a bear market now. What are we doing? We're just rallying. Lighter volume days. I'm more cautious. Again, I'm just watching the market this morning to see what's happening pre-market. All right. So I showed you guys. Let's get right into it. Okay. What I can kind of do. Moody's did come out, and this is another positive for the market. Moody's came out after the debt ceiling vote and said the country deserves a AAA credit rating, that it won't reduce that. Okay. We had jobs reports this morning, right? Harker, Fed, says it's prudent policy to skip a rate hike in June. So Harker came out yesterday and said it's prudent policy. It makes sense. Tech inflows largest in years. Hang Seng was up 4% overnight. Okay, this is what I kind of want to show off, okay? Started a small account with $25 on Tuesday. It's up to 101. That's a Webull account. What am I trying to do? I'm trying to prove that with $25, you can actually trade if you're patient. So I talk about the 3 S's always. What are the 3 S's? Safety, secure profit, and stress-free. The last thing I'm trying to do by having you all trade is stress about your positions. If you're sitting there on your phone, you're like plus 100, minus 100, plus 200, minus 200, and you're like cursing, you're stressing. That's not trading. Trading is finding the right setups, entering the trades, having the right strategy. I'm going to talk about my last three trades that took this $25 account up to 101, or I could talk about, where is it? I don't know. This account from $217 that I took up to now $1,000 yesterday. Okay, so the three trades that I want to talk about this week and the planning that transpired with them. I asked Love and Romeo to come on to explain their trades from last week because they had some killer trades, but they were unfortunately busy. Romeo will be live trading this morning at 9:25 on Discord. So again, my three trades going into the week, right? We had NVIDIA spike to 419. I entered AMD puts. That was my first trade. AMD was 125, 126, and I said I thought it would go down to 120. Okay, I exited out at 122, right where it is this morning. It actually went down to 118. So again, if I had done nothing all week, that account that I showed you at $1,000 from $200 would be at like $1,600, $1,700, $1,800. Okay, that's just it. Next trade was Uber. What did I see? I saw Uber being bought up on Wednesday. I saw a big block trade. Uber was trading at $37.35. I pointed it out. Did it mean that I jumped in right away? Remember, entry point is right important. No, when I saw the big block trade, I said to myself, if Uber comes down a little more, I can enter in. So Uber dropped to 37.07. I entered on the way down at 37.10. Uber popped all the way to 38. I exited out. Okay, that is the second trade. I also made a third Uber trade. Similar philosophy the next day, which was yesterday. It dropped down to 37.35, and I'm still holding a couple of positions in Uber, and they look to be extremely profitable. Uber just kept fading higher. My fourth trade, coin puts. Let's remember, coin was exploding yesterday afternoon. Let me just see where coin is now. Yesterday, it was just up 2.5% this morning. Right, let's just go to the one-day chart. Bum, bum, bum. Okay. Coin was exploding yesterday afternoon, which is this picture right here. I said to myself, okay, I want coin puts. I think it's overvalued. I looked at the chart for Bitcoin and I said Bitcoin could definitely fall, especially if there's any issue with the debt ceiling. So that was my fourth trade, coin puts. Again, three S's: secure profit, safety, stress-free. So as coin was dropping, and it surprised me with that quick drop, and I thought I'd have a better chance to exit today, so I did hold half my position. So I'm holding about 9 contracts, and coin's up 2.5% this morning. So that's not good for me. But as I already stated, I'm waiting till at least 10:30. I'm going to let the markets play out. What could hurt me? If the markets fade higher all day, then I'm going to be in a bad position. If the markets are choppy, then it's great because the market's opening up here. Even if we see any type of chop, I will have an exit strategy and a way to get out. The only thing that hurts me today is if the market fade higher. Let's say the market just drops off open. The debt ceiling deal went through. The market thinks that's positive, but really it's not so positive because it's going to pull liquidity from the market. So the market opens up at SPY 324, 324.40. Let's say it rejects. Where's it going? Probably going to 318. If today's a red day, and we'll talk about, I guess, my predictions, I'll give you your bear case scenario. Your bear case scenario is the market is going to drop. The bear case scenario is debt ceiling got pushed. It's going to pull liquidity from the market. We're seeing the SPY pre-market at, give me a second, SPY pre-market. There it is. Boom. 424 flat. Okay. Now, if I pull up, let's do that. Let me just pull up the SPY so everybody can see it with me. Boom, boom. Share screen. Let's get it up there. Okay. Add it. All right, good. You can all see it, right? So first off, what chart do I have on? The 1 hour chart, which dates us back to the 8th of May. So we have a good long-standing chart out there. What am I showing you? We're sitting at 424 this morning. Matt, in the last month, have you seen us at 424? No. We rejected here at 423. We rejected here at 423. Anytime we've seen larger candle volume days, it's been negative outflow. So the fact that we're popping pre-market, what I like to do on days like today, when futures are popping, I like to sell the spike. When futures are dipping, getting ripped on, I like to buy the dip in this market. Why? Because we've been range trading. Now, if you're one of those people that says bullish breakout, then okay, you'll trade accordingly. I'm not. I think there's more chance of chop. In fact, I think there's more chance we go down. So the fact that we're ripping higher to 424 pre-market, give you my bear case scenario. Bear case scenario is we're at 424. Maybe we open up to 424.50 or 425 out of the gate, and we drop down to 419. So 6-point drop, 425, and we just drop. We go higher, we fade. So your bear case scenario is 425 top side, 419 on the bottom side, maybe 418 and change. Okay. That is your bear case scenario. Now, your bull case scenario is we're at 424. We've still got to retest yesterday's close. Okay. So at some point today, we're opening at 424. We're going to go up to 424 and a quarter. Then we're going to drop and it's going to look like the market's going to get real red. But it's not. It's only going to retest yesterday's close of 421.82. Let's just call it 422. So you're going to see green, green, green. We're up 0.5%. We're up a little more. All of a sudden, the market drops. We're flat. They buy up the dip. So they're buying up the dip from the flat market, and boom, we're up again. So that's your bull case. So now you have your bull case and your bear case scenario. What else can influence the market today? Let me get back to my photos and notes that I like to leave myself. Where were we? I was talking about my trades. That's right. Talked about my exit strategy, right? Okay, what I saw yesterday and why I entered into coin puts. Recent algo flow divergence, bearish divergence. What does that mean? It means the algorithm is saying the price of the stock should be here, and the stock price is actually up here. There's called bearish divergence, meaning the algorithm and the stock price usually intersect or cross at some point. So when the algorithms, which are computer traded algorithms, tell you the stock should be down here and the stock is up here, usually they meet in the middle. It doesn't mean the stock has to drop down to the algorithm, and it doesn't mean the algorithm is going to go all the way up to the stock. Usually there is some intersection at which they meet. Okay, so that was interesting yesterday. Dell released some earnings early. I thought the Qs were a little frothy at 352.41. Where are they pre-market? Great freaking question. Maybe 354. Remember, they were as high as 357 the other day before we had a bit of a pullback. Let me just see if I can find the Qs. Where are they? They got to be here someplace. DraftKings, Uber, Disney, Palantir, AMD, Roblox, Apple. I got all my good trackers here. Amazon, right? All right, I'm not finding the Qs, so let me just add it. QQQ. Right, let's add it. Boom, let's see where the Qs are right now. 352 we closed at. We're at 353 flat this morning, up 0.28%. Now, let's remember, pre-market, if you guys are watching futures, the Qs were ripping up double what they are right now. They were up 0.6%, 0.6%. So they were already at 354, which is kind of where we were rejected already. So, again, I'm paying close attention. I know that some big institutions have been selling the Qs. So again, I'm not going to get fooled. I'm not going to be like, shit, I'm not missing this NVIDIA train at 404 or 405 this morning pre-market. NVIDIA's going back up to 419. No, even, what's the guy call himself? A value investor who had NVIDIA sold half of his stake. Why? Because he was like, NVIDIA at 400 is no longer a value stock. It's no longer a value stock that I can call in my value portfolio. Let me just see. Okay, so we'll get into some other stuff. Let's just remove this. Let's talk about some trades, I guess, or some stocks. Either one. Let's pull up Discord. Let's see where the market's settled at. This is what I like to do every morning. I mentioned this already. I go onto Discord, and I look up the market net flows. Now, first, these are just my trades from yesterday. Remember, I was in Uber calls. Why did I sell these Uber calls? Because they expired today, meaning if I was wrong about Uber and Uber started out very red yesterday before going very green, I got a great exit. These that I sold for like, what did I sell? $39 each, probably went down to like the mid-teens, maybe $15, something like that. They probably finished pretty good. At the doctor yesterday, right? That was a small account I was growing. I was up 60% of the time. It closed at $100. So I made over 111% yesterday on that one. Trading account, right. What I was showing you is 10:25 in the morning. My account was off 30%. But what do I say? I don't like to trade, even if I'm red between 9:30 and 10:30 in the morning, because the market usually works its way out. So even just holding at that point, right, a little later, I was only down 4%. So if I wanted to exit out there and I said, you know what, I think I'm going to be correct. That was me going to the doctor. And then all of a sudden, 12 o'clock, I turned green by 2%, right? I sold the one contract in Webull. I was up to $75, up 200% on the week. The Uber calls at 38.06, $1.44. I was content. I sold basically half of my my Uber calls. I held on to this one, which is up 43%. I entered a coin put for $73, which at the time was the day low. Now this coin put went all the way down to $44. I added a couple more. The coin put, I mean, here's another. I tried to add another 71. The coin put closed at $1.33. I exited out at $1.28. So in at 71, exiting at $1.28. Actually, my average was 56. $1.28. I made over 100%. It's 130%. So what do you do when thing spikes? You got to sell. You got to sell. Coin right there fell under VWAP. Doesn't surprise me that coin is where this morning? Probably $65 and something. So we're kind of filled in this big drop. We're probably mid-range here. It's over VWAP. Again, I'm not trading because I'm going to be watching what the Qs do. Again, they're up 1 point pre-market, 0.31%. So again, they were as high as 2% pre-market. All right, so what do I do on Discord? How do I start the day? Okay, well, I don't start it on my channels. I'm not going to lie. I post a video at 9 o'clock. Romeo, I believe, let's just make sure and get this correct. I believe Romeo is live streaming today at 9:25 a.m. So anybody that wants to live stream with Romeo, again, he crushes it. He uses his orbs. We might be the only Discord that has lessons posted. We have an education session, lessons where we have videos of Romeo or Love or Bfinger actually talking and helping you through different things. Here are your video lessons. That's what I was looking for. Okay, so we're explaining things and helping you learn. All right, so what am I going to do? I'm going to pass Romeo's channel, pass my channel, and go to the flow and algos room. If you don't know how to use it, there's a how-to. You could see everything you could do. Look at the biggest flows of the day. Biggest flows means where's the biggest money going? All right, so first thing I'm going to do is I'm going to look at the top flow. So I'm going to look at the biggest option flow from yesterday. Okay, what does that do? Well, I've always spoken before about having volatility in the options that you played, meaning you don't want to play an option that has no activity because you're entering and you're paying the ask. And when it's time to sell, you're selling at the bid. So you're killing yourself on the spread. So I suggest looking for popular options. Doesn't mean you can't afford, like, oh, look, NVIDIA's number one. I can't afford NVIDIA. Well, then you go out a couple weeks, you go out 2 weeks, and you get something out of the money. If you're getting the right entry point at $50 and NVIDIA goes in the direction that you think it's going to go by $3 or $4, that $50 option is going to turn into a $75 option, a 50% gain. Now, are you saying, well, NVIDIA is never going to go to 350 or it's never going to go to 500 in that time period, and those are the options I'm buying? I understand that, but it's going to go in your direction 3, 4, 5 points. You're going to be right, and you can claim 50% even having a small account. So again, I'm going here. It just happens the largest flow from yesterday happens to be NVIDIA. Meta, which got an upgrade, right? They upgraded Meta 280, 290. Apple, an industry leader. Tesla, which is the most traded option for contracts for 3 days straight. I mentioned this on Tuesday, right? Tesla was what, 196 on Tuesday? It's closing in on 210 this morning. Palantir after earnings. Remember, we were in at $9.40. Oh, so I was mentioning my trade setups, all right, and why I do certain things. My Palantir trade a couple weeks ago, Palantir shot up off earnings, went to $10 and change, then pulled back to $9.40. At $9.40, before all this AI hype, I was like, okay, you can ride back up to $10, maybe $11. Well, it's up to $15. Let's mention Carvana, which we spoke about yesterday. Somebody asked me, could Carvana run? I pulled up the chart and I said, if it runs, your upside limited potential might be $15 and change. Where did Carvana reject? I guess it rejected 16. So it definitely went and squeezed a little harder. But where is it this morning? I thought I saw it red. So again, it was risk versus reward. If you could ride a good Carvana, congratulations. Let's see. Okay, Qs. Yeah. Okay. So 1580 on Carvana, 1609, as much as 1675 pre-market, as much as 17 yesterday. So I was wrong about Carvana. Carvana pushed higher. Could it go higher than that? I mean, we're talking about a 3-month chart. You're at the top end. Now it could swivel down like it did just before that. So you could swivel around the 15 area. But what's likely to happen is once it's done with this little run, it's probably going to fill in the range between $9 and $12. Let's say $10 and $12. So, I mean, if I'm in Carvana, I'm taking profit. Again, good squeeze there, though. Definitely good squeeze. We have Lululemon reported. They crushed it top side, bottom side. Funny thing is, going all over Twitter a couple days ago, the Lululemon basically says you can rob their store and they won't call the police. They have a zero tolerance policy on their employees for calling the police. And 2 ladies in Georgia, Atlanta got fired for calling the police on some shoplifters. They literally just blatantly walked out of the store. Chewy had a good pop yesterday. Again, we had a number of Discord members that shorted Chewy at the top. I tried to get in at 37, like 42. I just missed calling the top, and then it dropped, and then it dropped, and it dropped. I wasn't chasing it. What other stocks do I want to talk about? Yeah, I've got coin again. I mentioned that before. I'm going to hold on to that. I'm not trading that until at least 10:30. Uber, I'm probably going to look to get out of my Uber. It's close to $39. In a perfect world, I was thinking $40 on Uber. That's when I was holding a shitload of calls. I unloaded a bunch for profit yesterday. So I'm not that tied to Uber anymore. It's not like I need hopium to move Uber. Again, AMD, when I sold at 122, I thought that was kind of a great exit strategy. It's at 121 this morning pre-market. So I'd really watch that 122 range because I actually think it would reject. Usually support turns into rejection. So whereas I was looking for it to bounce and it dropped, now I'm looking for it to reject if it gets up to that level. So that's just a thought process. Again, NVIDIA, we saw it at $405 this morning pre-market. All right. A ton of NVIDIA puts came across the wire. How do I know that? I use Discord. So how do I use Discord to find out the NVIDIA puts? Well, I go down to option sweeps. So it'll tell me any large option sweeps that happened yesterday. So I'll go back to the ones late yesterday. Apple call, right? Meta calls, CVS calls, PDD puts, NVIDIA calls. I saw some NVIDIA puts as well. Here's the NVIDIA put. Maybe they were just playing both sides. I saw a couple more NVIDIA puts. This is an NVIDIA call. Golden sweeps, meaning they sweep everything off the table. So we got the end of May. We were looking at a lot of downside. Here we go. 531. That wasn't yesterday. Here we go. So we saw this. I mentioned Chewy. So we saw this come across 1.1 on Chewy. That's bearish. AMD came in. Put strike on NVIDIA at 400. Right? Avgo, somebody took a chance on earnings. Again, on earnings. Put sweep on NVIDIA. Again, they also bought the call sweep, so they were playing both. They were straddling. Another put sweep on NVIDIA. Two more put sweeps on NVIDIA. Another put sweep on NVIDIA. So you're asking me how do I know NVIDIA is going to go down? Let's look at NVIDIA pre-market, okay? Let's pull up my freaking screen because you see what's happening pre-market. Now, market makers, they don't like to get fooled. So NVIDIA is popping pre-market. Oh, AI is back in play. 405. Where's NVIDIA now? Where is it? Shit, it's at 400. It's still up 0.66%. What do I think with all those puts coming across? Well, here's your 5-day chart on NVIDIA, okay? Again, it could definitely look like a pullback. You got that up, down, it back up. You can get that M, and we get that last line down on NVIDIA. But again, these are just ways that I like to use Discord. Again, you're welcome to join us. That was just the golden sweeps. We're going back to what I look at today. So I'll look at the top flow. I see there's a lot of activity in Amazon, Google, Marvel, Plug. If I'm thinking bull or bear, it doesn't matter. I might look to get into that. Okay. I'm going to stay away from AMC. I might look at Dollar Tree. I might look at energy. Remember, energy skyrocketed. Why? Is China no longer in recession because the Chinese market went up 4% yesterday? The Chinese market went up 4% yesterday because our markets ripped higher and we had a debt ceiling deal. So our markets ripped higher, faded higher all day, debt ceiling deal. Of course, overseas is going to go higher. What are they going to do? Follow our lead. Now, when liquidity gets pulled out of our market and our market drops, all these countries are in recession. All right, so I will look at some dark pool levels. TR, let's do dark pool levels. I'll look at for the Qs because I want to understand if the Qs shoot up, what am I looking at? Well, first, the dark pool level goes every $2. Let's make sure you guys can see this with me. All right, every $2 and change. So the fact that the top level is missing, it'd be around 355. So if we break this 352.60, and I'm looking at the Qs this morning, and I hope it doesn't happen because I think the Qs are overrated, right? So we're under the 353. So I'm looking at 352.60. We're still 30 cents above that. We closed at 352 yesterday. We rejected 353.36 yesterday. So again, I want to see if the Qs reject. If the Qs reject, NVIDIA will go down. If I see Apple and Tesla struggling. So again, Tesla was the most traded calls a couple days ago. So I want to see what's happening with Tesla an hour into the market. If they're selling the calls, they don't have to be buying puts. All right. That'll tell me it can be some pullback. Now, does it surprise me we're gapping up? No, because we were call heavy going into today. Going out a week, 2 weeks, the end of the month, July, it's more evenly balanced. But going into today, we were call heavy. Why? Because we're going to push through the debt ceiling and people thought the market would spike. In fact, that was my premonition. The market was going to spike heading to Thursday, maybe a little Friday, and then Friday would sell off. So I'm going to stick with what I thought was going to happen previously. Looking at the Qs now they're up 0.25%. Avgo turned negative. Carvana's only up 1%. Coin, which is up 3%, is only up 2% now. I guess it was even a little less a minute ago. Chewy still up 1%. Uber, again, and people aren't going to believe it. You look at AMD. Well, shit, I don't want to give out. I'm buying AMD. No, if NVIDIA drops, AMD will drop. All right, so then I'll look at how the market net flow finished. Net flow, market. Yeah, you can type all this in. Net flow of the market basically tells you how we finished. It means all the entire market, all the calls, all the puts, what's going on. So you look at the call premiums, the put premiums, and then you get the price. So the white is the price of the SPY right here, 422, 423, whatever. We had that drop from 423. We had a little bit of rebound. They were buying calls end of day, buying calls into today. Puts were actually increasing as well. So understand, people aren't trusting this market. Either one could be hedged. You could be in a bearish position and you could be buying calls to hedge yourself. You could be long a number of stocks and you could be buying puts to hedge yourself. So as the market shoots up. So I like to see how this plays out. I don't go off what happened last night. I go off of what I see the first hour into the morning. So 9:30, I'm looking at things. 10 o'clock, I'm still looking at things. 10:30, I start analyzing. Where's the net flow? Is it bullish or bearish? I look at all this shit before I actually check out what's going on with my stocks. I'm like, let me see. And then I give a prediction. Well, the market should be up this much. It could pull back this much, and go up, whatever it is. So that's how I do it. All right. So what do we got here? Let's get to some questions. Yeah, people, hit that like button. Let's talk about our favorite play today. I don't know my favorite play. What's the best way to play options when you work an 8 to 4 job? Okay. Best way to play options when you have a normal job is, first, number one rule, focus on one stock or one ETF, okay? You see shit going on with Apple, Netflix. Oh my God, NVIDIA's popping. Don't worry about it. You don't give a shit. Focus on one stock. I don't care if it's Roku. I don't care if it's D-Dog, Net. Pick one stock. Uber. Learn everything about the stock. Okay, I'll pick Uber, for example. Uber tends to trade in a range. Actually, I'll pick Coin, for instance, because I'm in Coin. Why did I get into Coin? Coin trades, for instance, on a range of 6%, 5%, on any busy day where it's up and down. Smaller days where it's just riding higher, you're about 2.5%. A day where the market pumps, Coin can move as much as 9% or 10%. A day where the market drops, I've seen the same thing, 9 or 10. So I've learned everything about Coin. So even though Coin's up 2.5% pre-market, I say to myself that 2.5% up could easily be 2.5% down, knowing Coin's ranges. So when you have an 8 to 4 job, you plan ahead. I'm following 2 stocks. One's a bull case scenario, example for today, and one's a bear case scenario. So I'd say, okay, Coin's my bear case scenario. If I want to be bullish something, I might be bullish Meta because I've seen them buying Meta, or Uber because I saw the big block buys in Uber and I've seen some buys on Uber this morning. So I'll say, okay, if Uber draws back and I think it's still going to be bullish today, I would look for a pullback to $38 flat. It's at $38.48. It's at $38.70 pre-market. So I'm thinking to myself, $38.12, $38.20. That's my entry point. So I'd be calls. I'm looking for it to drop. How do I know if it drops? I set an alert. Okay. Vice versa. You're looking to buy puts on something that's ripping higher off a squeeze, like maybe Upstart. So you put in your price alerts for Upstart and you say to yourself, I'd be looking at the $30 puts. Upstart's at 31.5 right now. I'm going out 2 weeks to give myself more than enough time, but I want to enter at the high from yesterday. So I want to find Upstart's high from yesterday, and I want to alert myself there, close to it. $32 yesterday was the high. It's trading at $30.45 this morning. So I might put an alert at 31, 31.50, and 32. And as my alert's going off my phone, I go, okay. And at $32, now I'm watching it. Now I'm looking at my option saying, okay, does my option look like it can turn around or something like that? Kingdom Love, what's going on? FL 528,000, put $20. Are you talking about? I have no clue. Florida lottery, maybe? Who knows? I missed out on so many good plays yesterday, but I did make some money on Spy Call. Never hurt sitting on the sidelines. Yes, that's exactly it. So I talk about, one of the most important things is patience, 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 patience. Just wait for your trade. I'm going to get to the beginning. Okay. I bought a Spy put 419 yesterday, which expires on Monday. I think I'm officially screwed. Break even at 418.04. You're not officially screwed, okay? But let's go over the scenarios for today. The scenario for today is, well, okay, if you see the market sell off today, then you're okay to hold until Monday because we could have a follow through. So if we see some chop, but it looks negative or bearish to you and you're holding throughout the day because you expire on Monday and you're holding your one contract, then you could hold until Monday, or at least I would, okay? If you see support on the market at, we dropped down and we see yesterday's close at 422 and you see support at 422 and you see volume spiking, then yeah, maybe you're just looking for some type of dip to get out with the least possible loss on that. It also depends when you bought that SPY 419 put. I'll talk about my coin puts one more time. I entered coin puts when it was $66. So although coin is ripping up 2% this morning to $64.80 something cents, where is it? 219. It's up. It's $64.96. Still $1 less from when I entered. So entry is really, really important. I'm not sure where you entered, but yeah, I mean, that could be in trouble. Romeo's been talking about buy the dips, buy the dips. I mean, okay, so my trading strategy today, just to share with everybody, because I'm going to head over to Discord in 1 second, is I've been green the last 3 weeks, Monday through Thursday, every day. Every day the last 3 weeks I've been green. Monday, Tuesday, Wednesday, Thursday. Of course, not last Monday because this past Monday, it was a holiday. And then what happens on Friday? I got rocked 3 Fridays ago. I got rocked 2 Fridays ago. And I got rocked last Friday. So me going into Friday, what am I telling myself? First off, I ain't getting rocked today. There's no freaking way I'm going to get rocked today. Well, how do I know that? Because I don't even have to buy any new positions. Ellie mentioned patience and wait for a proper entry. So I don't care. I've got options that expire June 9th. So technically, I could be hands off today completely. But that's tough for me because when I see a spike in my option price, I want to get out. When I see a dip, I'll re-enter. So maybe the only thing I do today is I sell my option at $1 and I rebuy it at 80 cents, the option that expires next week, whatever position that is. So I'll save 20%. I'll still have the same number of contracts, but I'll save 20%. Whether my option goes up or down today, if I can exit out at $1 and buy back at 80 cents, I can save. So that's all I'm really looking to do today is save percentages, get out and get into the same place. My strategy goes out a couple of weeks for some of these plays. So I don't want to ride the elevator. I get out when I see it spiking. I get back in on any dips. If I can save 20% and I've got $1,200 invested in a single play, that's $240. If I do that to 2 plays today, whether I'm profitable or not, I could save $480. That's my day. I made $500. I'm done. Now, again, I am monitoring my small accounts, so that's a little more specific. Again, at $25 up to $100, probably opened this morning at $75, so I'm still up 200% on the week. But I was hoping to get out at $115, make 16% today and get out, because that would be a killer day on a small account. Same with my larger account. Going into last night, I was hoping crypto would drop, coin would drop. I had my exit strategy, would have put my $1,000 account from $217 up to $1,900. Now it might open in the $800 range. So I say to myself, is $800 good enough for me? Or am I going to let it go an hour or two, possibly knowing my downside would be $500 would be a 50% loss, possibly knowing my upside can be a 50% gain. Seeing how I'm going to start out the day down 20, 25%, I say to myself, okay, so I only have 25% loss possibility, maximum risk in addition, and I have 75% if I'm correct, and it flips. Now, yesterday, let's remember, Uber opened red and finished quite green, right? Uber opened at $37.50 it was, or $37.40, and it closed a whole dollar higher, a whole 3% higher. Anyway, I'm heading over to Discord, morning video, and Romeo's going live in 21 minutes at 9:25. If you need to follow us over to Discord, I'll type it on the side, but it's socplatform.com. It's as simple as that. It's there. Everybody have a great day trading. Fridays for me.